What's up, everyone? Dylan here. I wanted to hop on to do another episode of the weekly analysis video. As always, I'll be talking about some of the key areas that I will be looking at going forward to gauge relative strength and weakness and ultimately come up with some trading plans around. With that said, we'll hop right into it. So, the market came off last week for a few different reasons. A lot of people were blaming Trump's cabinet nominations and how they basically created some chaos. And with the market priced at high valuations, there's not a lot of margin for error. So any, anything that hints towards like uncertainty and chaos will, more than likely cause a pullback, such as what we saw last week. There's also a few other things that I saw surfacing, such as, tensions out of Ukraine and Russia, escalating, increasing yields, right? So there's a few different pieces of the story that are going around, but ultimately, the market, you could argue that it was kind of due for a pullback. So whatever reason it was, let's talk about where it went to and where it bounced and going forward, some of the key areas to look at. Okay, so what's interesting is if we use a measured move looking at the last time the S&P made a high to the point where it sold off, you could see that from peak to trough it went down 3.4%. Okay, in this case it was very, very similar, right? So from the recent high to the recent low, it went down 3.28%. So very, very similar drawdown relative to the last time. Now, will this time produce a bounce to new all-time highs like the last time did? Maybe, but like I said, we don't know what the future holds. Instead, what we can do as traders is map out some key areas and look at how price reacts to those key areas to kind of give us a gauge as to where we believe the market heads next. Okay, so I thought that was interesting. Another interesting fact from last week, the Nasdaq fell every single day of the week, right? From Monday to Friday, it had 5 consecutive red days. The last time that occurred was the week of August 2nd, 2019. It had not happened for 5 years. I thought that was pretty interesting. Okay, so like I said, 5 consecutive red days from Monday to Friday on the Nasdaq, and you could see that the Nasdaq was relatively weak relative to the S&P as it fell as much as 4.38%. Okay, so what happened? Why did they bounce? Okay, so to start off, technically they were oversold, right? If we go to a 4-hour chart, you could see the RSI went into oversold territory on both indices. So the S&P got down to a 23.71 RSI on the 4-hour chart. Anything under 30 is technically oversold, right? And Nasdaq got all the way down to a 19.72. So both were oversold on some of the higher time frames, which can trigger some natural buying from, say, CTAs and algorithmic programs. Okay, so that's to start off there, right? Also, Nasdaq had a critical trend line. Okay, so the critical trend line stems from the August 2024 lows, and you go ahead and attach it to the lows from early November, and you could see today we came into that same trend line and bounced very, very well. Okay, we could also latch on to last week's low, which was Friday low, and you could see that's exactly or very, very close to where the bulls stepped in today. And basically, since that general area, the trend line and Friday's low were tested. Once that area stabilized, the selling pressure stabilized, and the bulls were able to kind of, move away from that area. From there on, it was just a V-shaped reversal, and the bulls did a very, very good job pushing value to the upside. Okay, so one lesson that I want to discuss is the fact that you could use the VIX to coincide with that context. Okay, so you could see in the Discord today, this was in the morning before the market opened, like 40 minutes before the market opened. I said, hey, this is the NQ visual. 20,425 aligns with the key trend line support stemming from the August lows, which I just went over. Good spot to gauge relative strength weakness. That line also sits above last week's low, so it's a very, very important area for the bulls to defend. If they fail to defend, plus the VIX takes out Friday's high, then selling pressure should persist. Okay? Now, did that trend line breach? Technically, yes. It went down as much as, what is that? It made a low at 382. So it broke below that 425 by over 40 points. However, the VIX futures never took out Friday's high, right? Friday's high was 17.6. What was today's high? 17.6. So it never took out Friday's high, and as a result, that coincided with the low in the S&P, which is not a coincidence, right? So I said VIX futures just hit Friday's highs at 17.6 and failed so far. ES just got supported as a result. That 17.6 level is so damn important. If the VIX continues to fail there, bulls will have a much easier time defending dips. And that's exactly what occurred. The moment VIX failed at 17.6, the S&P was able to stabilize and get supported for a move back to the upside. So I just want to show you the timestamp. The low on the S&P occurred at 9:01 a.m. Eastern Time. Okay, look at this. The VIX failed at Friday's high at 9 a.m. Eastern Time, right? See the timestamp down here, right, where it says 9 a.m.? That test occurred at 9 a.m. 1 minute later, the S&P bottomed. That is not a coincidence, and I tried to kind of hint that if that did occur where the VIX failed at Friday's high, that the S&P would have a much or the bulls would have a much easier job defending dips in the S&P, and that's exactly what we saw. So going forward, those pieces of information remain very, very important. So this trend line remains very, very important. Like I said, the 6 hour you could see bounce very, very close to that line, plus Friday's low of 20,405 also gave the index some support, in tandem with the S&P and the VIX correlation. Okay, so going forward, those areas remain very, very important. Okay, and you could see the last time we spoke, the last time I did one of these videos, I was telling you guys that I would imagine that the Nasdaq would come into this area and bounce. So clearly it did not bounce at that previous resistance, which I believe to turn into support, and it continued selling lower. So that's why I highlighted the fact that the S&P sold off a little over 3%, which is the same pattern as the last time, and both S&P and the Nasdaq sold off into the RSI being oversold and Nasdaq critical trend line. So there were more pieces of context where it bounced today relative to the time that the Nasdaq was hitting that previous trend line that I was telling you guys about. Okay, so I want to make that very, very clear. Okay, so now looking at areas to the upside. So to the upside, I want to cover this here. The S&P 50% retracement from all-time highs to today's lows, it sits at 59.54, okay? That general area also lines up with where I believe the anchored VWAP spanning from all-time highs to is going to eventually go down into. So you could see the anchored VWAP kind of drops down 10 points per day because as volume trades below, the anchored VWAP will descend lower. So basically, each day it's dropped about 10 points lower. So if the anchor VWAP is right now is at 59.64, tomorrow it'll be at 59.54, right? That's 10 points lower. So the fact that the anchor VWAP will probably align with the 50% retracement as of tomorrow, and that's a double, confluence area. I would definitely keep an eye on that. So does it mean that it's guaranteed to fail because two different pieces of information align? No. We don't know if it's going to fail or if it's going to overcome that area, and that's why it's so important to assess what happens, right? You can't just assume that it's going to break or overcome it. Instead, we watch to see what it does there, and whatever it does, we then use that context to figure out the next game plan. Okay, so if it breaks above both lines like butter, right, it freaking doesn't even it goes above with momentum, we can assume that the S&P is relatively strong and is looking for higher prices, right? But if it does fail there and starts to roll over, we can assume that, okay, the bulls don't think that this is a very appealing area from a risk reward standpoint, and they're looking to reload at lower prices, right? Just to kind of give you an idea of what I do on a day-to-day basis, right? Figuring out where the key areas are and then assessing how price reacts to those key areas, and then ultimately make plan trade ideas off of that. Okay, so this 59.54 to 59.60 area is going to be very, very important because it is a key area from a technical standpoint. Okay, one thing I wanted to talk about as well is this TNX level. Okay, so the TNX is the 10-year Treasury note yield, which some people argued was the reason that the S&P and the Nasdaq came off last week because yields were on the rise. Okay, and higher yields is essentially a headwind for equities because it makes their ability to finance debt more expensive, and essentially it makes the overhead for operating costs more, right? I'm not going to get into too much detail on that, but in theory, higher yields are a headwind for the equities. So if this general area breaks to the upside on TNX, call it over 4.50, right? 4.50. If that breaks in the TNX to the upside and price has momentum and traction and continues to the upside, that will be viewed as a headwind for the overall stock market, S&P, Nasdaq, so on and so forth. So if that occurs, I want to give you an idea of that. I will be looking at it just to give you a heads up, okay? But as long as this thing continues to go to the downside and continues to fail at that trend line, it should act as a tailwind for the S&P and the Nasdaq. So that's that. In terms of economic events this week, it's not a busy calendar. We have jobless claims on Thursday morning, 8:30 a.m. Eastern Time. And then Friday you have some type of ISM and then consumer sentiment at 10 a.m. But the main event for the whole week is NVDA earnings, which occur tomorrow after the close. So NVIDIA earnings, very, very important. As NVIDIA is a very, very high beta name and basically has a lot of influence for the overall market. So depending on if that is a blowout earnings, blowout meaning very good or blowout meaning very bad, it can affect the overall sentiment of the market. Okay, so that's it for me. Covered some downside areas, covered some upside areas, and then some of the news to look out for, as well as keeping an eye on the yields. Okay, so I will talk to you guys next week. If you guys have any questions, feel free to comment below or hit me up in the Discord. Peace.